Hi guys, so let's now take a look at the statement of financial position, which is also known, of course, as the balance sheet. So let's see what we've got here. Now, this simply illustrates what a business owns, its assets, what it owes, its liabilities, and its capital at a specific point in time. So that's really important that you understand that element. We saw that when it comes to the statement of financial income, or the profit and loss or income statement, that is a period of time, perhaps 3 months, perhaps 6 months, perhaps a year. But with the balance sheet or the statement of financial position, what you have is a given snapshot at a particular point in time. Okay, so let's just take the key points regarding this statement of financial position. So firstly, it shows how a business has raised its capital and how it has used it. Okay, so that's a really important point to understand. So it tells us where this money has actually come from to actually support the asset purchases of the business. So it will enable you to actually understand the composition, that is the breakdown of each of the areas of assets that they've invested in. So whether it's buildings, whether it's machinery, whether it's fixtures and fittings like the furnishings and decoration and so on. Okay, there's a number of key principles that we must focus on here though. The assets will equal liabilities. Okay, so your total level of assets will equal your liabilities. So that is the money that's put into the business will equal the assets that are actually accumulated by the business. The total assets is simply the actual amount of fixed plus your current assets that you actually have. Fixed assets, non-current assets, they are long-term assets that the business will use over a long period of time, whereas the current assets will be used up within a year. Great examples there would be obviously inventory, as well as cash that's actually sitting idle in the bank perhaps. And then we've got liabilities, and examples of liabilities include share capital, borrowings, which could be short-term or long-term, other creditors, and other reserves that have been gathered by the business to actually enable them to conduct their purchases into assets. Okay, now the importance of this statement of financial position is that it will highlight the actual value or worth of the business. Okay, it will enable you to actually compare progress between different periods, so you can see how much more money is being put into the business and how much more that business is actually now worth as a result of retained profit going back into the business and so on, or perhaps more share capital being sold. It may also tell you how much borrowing they actually have as well, and it will tell you the makeup of the actual borrowings for the business, whether it's short-term borrowings or whether it's long-term borrowings. Now, short-term borrowings would be things like overdrafts, for instance, but longer-term borrowings would be obviously things like mortgages, as well as hire purchase agreements, and so on. Now, what's also interesting about this is that when it comes to the borrowing that you actually have, it also helps you to understand how vulnerable a business might be to any changes in interest rate. Okay, right, we'll leave that there for this session, and we'll move into a little bit more detail on this statement of financial position in our next lesson. Thanks, guys.